Hey everyone, welcome back to Corporate Decoder, the place where we turn confusing corporate documents into something you can actually understand. Ever wonder how a fund making bets on global markets is actually doing? Today we're diving into the world of Graham Alternative Investment Fund, and trust me, it's more interesting than it sounds, especially when you look at where they're parking their money. It is pretty predictable though, these guys always put a graham cracker into their investments. Get it? Graham. Alright, I will see myself out, but before we start, if you like understanding what the big funds are up to, hit that subscribe button and join our Discord community link down below where we chat about all things corporate finance. Alright, so what's this document all about? This is Graham Alternative Investment Fund's latest quarterly report, a snapshot of how their core macro portfolio performed May 25. Think of it like a report card, but instead of grades, we've got dollars and percentages. First, the big picture. Let's check their financial condition as of March. Their main asset is their investment in something called Graham Alternative Investment Trading LLC. At fair value, that's about 30.17 million. Then we see something that sounds like some redemptions. This is basically money that's expected to come back. Finally, they have some cash, about $170. At variable is in cash, about $117,000, sitting around in cash. Basically, this means that overall they're doing well, but still staying cautious. Let's look at the other side of the balance sheet. Members' capital. It's broken into different classes of units. It's kind of like different tiers of membership, each with different benefits and costs. Class 0 units are worth about 17.7 million. Class 2 7.7 million, Class 2 7.7 million, Class 2 7.7 million, then there is Class 3A and 3B, which are valued at 1.4 million and 3.1 million respectively. What this means is that they have the most in Class E and B, 0.4 million respectively. Here is an important metric, their net realized gain on investments. That's $977, $937, and $937. On the flip side, unrealized appreciation was at a decrease. Now here's something important. What did the expenses look like? It looks like they invested $3,000 into Graham Alternative Investment Trading LLC, but also sold investments worth $20,005. There are some administrative fees there too, and incentive allocation is also not zero. But how does it all add up? In the end, their net income was $793,555. They had a pretty good quarter. Remember, this is just for a 3-month snapshot of the year. Let's briefly touch on the statements of changes in members' capital. At the end of December, the Class 0 units had a capital of 16.5 million, Class 2 had 8.4 million, and Class 3A had $500,000, while Class 3B had 2.8 million. It looks like almost every class is seeing new subscriptions, especially Class 3. It is a very nice trend. How's the cash flow looking? Net cash used in operating activities of the fund was actually negative. This is not that bad as it can be offset with proceeds from the sale of investment. Subscriptions, net of subscriptions received in advance, brought in $2,000, $14,000, $40,000, while redemptions took out about the same, roughly $5,575. At the end, it resulted in a $40,000 increase in cash and cash equivalents. So it looks like everyone is playing it safe in case markets change. Here's where we dig into the details, like a cookbook for finance. The notes explain the ingredients of the financial statements. What are their accounting methods? How do they deal with risks? And what's up with these fees? The first important thing to note is the nature of the company. It is a limited liability company based in Delaware under the oversight of the US Commodity Futures Trading Commission. So what does it do? Invests in various trading vehicles, and the goal, long-term capital appreciation through trading across global markets. Think futures, currencies, and other fancy financial instruments. Here's where we learn how they keep score. Their financial statements follow US, Generally Accepted Accounting Principles, or GAAP. They also use estimates, so the numbers aren't exact, but they are a best guess. Most of the investments in their financial statements are based on the fair value of what they think the company is worth. Alright, so who's getting paid and how much? The manager gets an advisory fee, 150% annually for Class 0 and Class 2 units, and then slightly more for the other classes. For just this quarter, advisory fees totaled over $14,000. They've also got a sponsor fee, and at the end of each quarter, an incentive allocation gets paid to an affiliate of the manager. For this quarter, that was over $20,000. They've also got a sponsor fee, and at the end of each quarter, an incentive allocation gets paid to an affiliate of the manager. For this quarter, that was over $20,000. What could go wrong? Well, global market conditions, political instability, wars, health emergencies, basically any major world event could throw a wrench in their plans. The lesson here is to remember that the fund's performance is subject to the greater movements of the entire world. The fund also has financial highlights where we get a glimpse of the net asset value, or NAV per unit. It looks like Class 0 had an NAV of around 241 and Class 3B was about 97 in March. You could think of the NAV like the estimated selling price for each unit. Here are a few ratios to average members' capital. So what are they saying about the incentive allocation? What about the expense? What about the total return before? It looks like the incentive allocations are not very good for the investors, as it always decreases their returns. Finally, it is worth noting there are subscriptions around 0.8 million and redemptions of about 0.3 million after the period's end. This is not included in the financial statement. Let's take a quick look at their financials too. Again, their assets are investments and liabilities are redemption payables, etc. It appears that they have had a great 3 months with their net income rising over 1.9 million. They appear to be invested in Graham Commodity Strategies LLC, Graham Derivative Strategies LLC, and Graham K4D Trading Limited. So what do I really think about this company? Is it the next Berkshire Hathaway? I don't know, but some key strengths are that their revenue sources are very transparent and that the assets are highly liquid. However, one problem is how hard they had to work to have such a low income. Expenses, administrative costs, interest all weigh on the fund's revenue and should be considered. But it depends on your investment goals, risk profile, and outlook of their market. Make sure to do your own research before investing. Alright, that was our breakdown of Graham Alternative Investment Fund's quarterly report. What did you think? Are you investing? Drop your thoughts in the comments below. If this analysis was valuable, hit that like button and subscribe for more. Also, don't forget to check out the Discord. You can find it in the description. Thanks for watching, and I will see you next time.